Hey traders, welcome back to this week's weekly Forex forecast. Last week was a little bit of a tricky week in terms of price action, and it was another winning week in the books for GMT members. It is 15 out of 16 weeks were profitable with the GMT setups for members, but it was a tricky week. Why? Because of this right here. This big candle that you're looking at in euro dollar was because last week there were reports out of the White House that Trump was going to fire the Federal Reserve Chair Jerome Powell. Now, the reason that markets generally don't like this is because, the government and the head of the central bank are supposed to be independent. In reality, they, cooperate and they're not totally independent. But bondholders do not like when, that kind of interference takes place. So as bonds were sold on the news from White House officials that Trump was going to fire Powell, the dollar also sold off. Why? Because if you're selling bonds, you're essentially selling dollars. You're selling US denominated assets. So you're increasing the supply of dollars. And we saw the dollar sell off and euro dollar rallied. And then immediately, almost immediately, Trump came out and said he's not going to do it. And we saw this whipsaw straight back down. So what that kind of did is it sort of distorted the price action in a number of markets last week. And that's what made them a little bit tricky. Markets tend to flow. You kind of have a flow in price action. And when you get this kind of whipsaw all within one candle like this, it kind of just starts to chop around, consolidates, and it just, as I said, disrupts the flow. So that did make last week a little bit tricky. Coming into this week, euro dollar is not up on the top of my list. And when we go through the portfolio selection, you'll see why. However, we have started to break out of the channel. And on balance, I am only looking for short opportunities in euro dollar next week. So there is a good chance that I don't trade euro dollar at all next week. We look at it every single week. We start the video every single week with euro dollar because many of you like it. But on balance, I would have a short bias. Now that means if we pull back, if we start to break back inside the channel and we trade above the 1.1745, then I would be interested in potentially shorting this for 1 or 2 days. And in this case, probably back down to the lower channel as a target. That kind of what I'd be looking for. Because you can see if we turn overbought during the week, which is in this range here, and this is where we turn oversold. And of course, we'll be looking at these oversold and overbought levels in every single market in today's video. But if we trade above the 1.1745, we become overbought during that week. It means that week has gone too far and the odds of it reversing back within that week are high. So that is the setup I'd be looking for on balance. I wouldn't be surprised to see us start to break down also, but that will probably happen maybe only after Thursday. Why? Because on Thursday we have the ECB. Now, having the ECB so far out in the week on the Thursday does mean that euro pairs may just chop around and do nothing pretty much into Thursday. So if you start to get a test, of the upper bound kind of early Monday, Tuesday, then that would be good because we'd expect it to hold its range, with a high degree of probability with the interest rate decision coming up later in the week, because most of the money doesn't come into the market, until the interest rate decision takes place. So just bear that in mind if you are trading euro dollar or the euro pairs next week. They may just kind of move sideways and do nothing into Thursday. And then, of course, if we get the break higher after the ECB, that's when I would consider this short. And if we get a weakening of the euro from the ECB, that's when you get this kind of consolidation. Probably do this into the ECB. And then if you get the weak outcome, you get the follow through trade. So that would be the kind of post ECB setup, you could look for down to the 1.14960. So that's what I see with euro dollar next week. The euro pairs are not high up on my list. They're probably going to chop around because of the ECB on Thursday. I do think there are better pairs and better setups to trade next week, and we're going to look at them in today's video. Okay, so looking at the portfolio selection before we move on to the markets and the pairs themselves, you can see quite clearly to the downside the Japanese yen, the New Zealand dollar, and the pound. I mean, they're the only three currencies here which have red performance wheels. So it's quite straightforward to the downside. I'm primarily looking to be short the yen, short the New Zealand dollar as one of the top things I'm looking for next week, and short the pound. Now to the upside, again, it's quite clear what the number one long theme is. It's the Swiss franc still. The Swiss franc was actually, buying Swiss francs was how I ended up getting paid last week in last week's trading. So that theme is a fantastic theme. And every single time the Swiss franc weakens, I'm going to be looking to step in to buy it unless or until we start to see this changing. So the Swiss franc has been a very good long theme. It continues to be a good long theme, and franc yen, New Zealand franc, and pound franc to the downside are the three top pairs that I'm going to be looking at next week. So the second long theme that I'm looking at, is a little bit less clear, because we have the euro, which has been one of the strongest currencies, ever since we had that big EU fiscal catalyst, and we saw that kind of 5 standard deviation move up in euro dollar within 1 week. We've really seen money coming out of mainly the dollar and going into, the EU majors, especially the Swiss franc and especially the euro. So that could be coming to an end. However, with the ECB, coming up next week, that is probably going to dictate the next direction of the euro. So the euro is not a fantastic currency next week, in my opinion, anymore. It has been. We've been trading it to the upside. It's been a long theme, one of the top long ideas, and we've had that big rally. But coming into the interest rate decision, I would rather wait, see what happens on the interest rate decision, and then make some moves, or at least wait till next week even to trade euro pairs. So euro pairs are kind of off my radar. I will keep an eye on them. I look at all the pairs throughout the week, but they're kind of off my radar. They're not top of my watch list. So what then is, second after the Swiss franc? Well, it is the Canadian dollar. We are seeing crude oil kind of bounce, although overall it's still weak. And, simply put, quantitatively, the Canadian dollar is something that is holding up, relative to other currencies, and we should be looking at to the long side. So I'm also going to be looking in today's video, and at the top of my watch list for next week, CAD yen to the upside, New Zealand CAD to the downside, and pound CAD to the downside. And the third one here is the dollar. So we have seen, some strength because of the hot jobs data that's been coming out. That strength got reversed because of the suggestion that Powell was going to fire the Fed chair. Trump quickly came out and kind of dismissed that, and now we're starting to see strength coming back into the dollar. So, on balance going into next week, I do, as the third long idea, like US dollar to the long side. So we're going to also be looking at US dollar yen to the upside, New Zealand dollar to the downside, and pound dollar to the downside. And that's also why, on balance, I do slightly prefer short opportunities in euro dollar heading into next week. Kicking off the watch list then, as we always do, with crude oil. Now, crude oil, as we've discussed in previous videos, it has that kind of same issue that we saw, I guess, last week, where we had the big volatility spike on the Iran-Israel escalation. And then as soon as the ceasefire was announced, it dumped. And look at what's happened after that. It just has seen a contraction of volatility. Hasn't really gone anywhere. So crude oil, was kind of rocking and rolling, and there were decent opportunities. Now the opportunities have kind of dried up because of that. It will, resume again, and we'll start to see opportunities coming back into it in a decent way. But for the time being, it's just kind of meandering and not doing too much. So on balance, I do still favor shorts if we can get there. Above the 71.15 next week is where I'll begin to look. There's no key areas of resistance we can really trade from. I suppose you could take maybe this low. Now, broken support, turning resistance. The only reason I don't initially look at those straight away is because I prefer price points in the past which have driven price lower if I'm looking to short. This is actually a price point which pushed price higher when price came down to it, which is fine because, broken support turns resistance, but I prefer resistance levels which, in the past have driven price lower. So when they come and retest, you tend to see the same pattern. So we don't have anything there. The next high is actually over here, and that's because of the volatility we saw on the ceasefire agreement. So overall, not a high quality market at the moment, but if we do trade above the 71.15, you could look left at these lows over here, and I would start to, at these lows, either here, or if we go straight through, I'll just look for this one, but I'll start to look for those reversal patterns to see if we can get that reversal back down, because as it currently stands, this is most likely all just one big bear flag. And we're just kind of digesting the big price swings, and the next leg down is probably going to be lower, even though, we're already quite low, $63 a barrel at the moment. So that's what I'm looking for in crude oil. The extremely overbought level next week is the 75, and that is the second place I can pull the trigger on a short potentially. You know, intra-week trading this, I wouldn't really bother. Again, like I say, not high up on my list, but I'll keep an eye on it for when it does start trading once again. Okay, so kicking off with franc yen, which is still my favorite market. It's been difficult to actually catch dips in it because it's been so strong that, you know, mainly kind of any intra-week breakout trading would have worked really, really well. But I am still focused when it does sell off in buying dips in this market. Now, what I like about this market is not only is it high up on my watch list, you know, the Swiss franc I want to be long and the Japanese yen I want to be short. So if it comes down, you know, what does that mean? It means that essentially I would be assessing this as a mispricing, right? Franc yen is a market I'm anticipating to go higher. It then turns oversold. We're then looking at that and saying, well, this looks basically mispriced, right? Unless a catalyst has come out, which can change the direction. You know, if the SNB comes out and says they're going to cut interest rates to -3, you know, obviously that's not going to happen. But hypothetically, you know, and then it starts to tank, well, you know, it could be a reversal. It's not necessarily a mispricing because there's a catalyst driving that sell-off. But if it sells off without any kind of catalyst, we can look at that and say, you know what, that move is probably not going to hold. So that's primarily what I want to see next week. I want to see it come down, and there's a really nice low just here in the buy zone next week at the 183.36. This is exactly where next week I'm going to be looking for sellers to attempt to break out of this low. And I'm going to be looking for them to get trapped, and I'm going to look for that liquidation back inside the range for 1 or 2 days worth of reversal. The extremely oversold level next week is the 181.35. So this is the area, you know, if we break through here, maybe I'm already long. Sometimes I'll add a position, or most of the time, in fact, all the time, I'll add a position here. Now, you know, if it's really strong, I might just cut the trade. That's why I say sometimes, you know, if you see something like euro-dollar, and we had that big catalyst, I think I was actually short euro-dollar when the catalyst came out. I can't remember exactly. I was definitely short euros, even in a kind of indirect way. So that could be, you know, being long New Zealand dollar, you know, as the euro goes up, because if the euro goes up, the dollar goes down, and so we saw New Zealand dollar rallying hard. We saw Aussie dollar rallying hard. So I was definitely short, I think, Aussie dollar, but I think I was short euro dollar as well. So the point being that if something like that happens and it's a really significant catalyst and you see the market ripping, sometimes you just have to book a loss and say, okay, look, you know, there's no point adding to this because it's a real catalyst here, you know, driving this move. So we'll just, you know, take the loss and move on. But in the absence of something like that, you know, I would be looking to add, you know, at the 181.35. So that is the second place. I will be looking for potential long position, but just bear in mind, most of the time, the vast majority of the time, these gold levels are not hit during the week. So it's unlikely that these get tagged. They're kind of backup levels. For those of you who follow the weekly Forex forecast, you'll know this. But if you're new, these are more kind of backup levels where I can add to a position if I so wish. So in terms of franc yen, those are the two things I'll be looking for. You can also look for franc yen to pull back. And this is what we've seen many, many times. Look at it break down, consolidate, and rally. And then it actually holds, you know, above its moving average. Well, we've actually broken down. It could be doing that already. So either it breaks back down and you get the breakout and the moving average consolidates and you get that kind of bull flag set up, or this could actually be it now. See how we started to break down? We just kind of dipped through and we've consolidated. Now we're kind of breaking back up. So you could look for that bull flag, and on lower time frames, you know, you'll see this kind of channeling down. You drop down to the 1 hour, 15 minutes. What this will look like is this will start to look like potential bull flag. You know, the channel will do something like this. And that's when you can look for the breakout. And as it pulls back, the moving average tends to follow it. And now you're looking for an opportunity. And if you're doing that kind of intra-week stuff, you know, profit taking would be above the 187.73 next week. So really like franc yen. It's at the top of my watch list for next week. I can only be long this market or do nothing. Cannot short franc yen. Next is New Zealand franc. I can either be short New Zealand franc or do nothing. Cannot buy this market next week. I want to see New Zealand franc pulling back and entering the sell zone. The sell zone is above the 0.4838 next week, which is right here. And as soon as we pull back, there are some nice lows here and here. But again, these are the levels I'll be preferencing next week. So these prior highs where the market pulled up and then it pushed it down, pushed up and then it got pushed down. So between the kind of 0.48581 and the 0.4863, this is where I'm going to be looking for New Zealand franc to rally into. I'm then going to be looking next week right in this area for buyers to attempt the breakout, and I'm going to look for them to fail. Why? Because I'm making the statement that if you're in this area, you shouldn't really be buying this market, because balance of probabilities is that it's not going to go much higher. So if you're buying breakouts here in the sell zone, you're probably going to fail. And when they fail and you pull your positions or stop losses get taken out, that liquidation to the downside is where you can get paid. So that's what I'm going to be looking for. That happens to be, you know, the exact setup we look for day in, day out with GMT members in real time as well. If we trade above the 0.4899, that's where we turn extremely overbought. So again, you know, it's just an area you can look for that second position. And the third thing is, if we break back down below the moving average, you can see we're kind of above it. You can look for that pullback, kind of bear flag setup. You see one here, bear flag, and then kind of happens in a candle. It still comes back, and then you get the next leg down. So you can look for that next week to the downside in New Zealand franc, should you get the nice breakout to the downside without taking out the upper bound. Profit taking target next week in New Zealand franc is the 0.4716. Next is pound franc. Now this is a really nice market. I can only be short or do nothing. I cannot buy this market. And this is kind of mirroring an exact kind of replica of what we saw last week in US dollar franc. So last week US dollar franc had this kind of channel, and it had this confluence of the down channel, the descending channel, the horizontal level, and right by the horizontal level last week was the bottom of the sell zone. We came up, we pushed into this area, and that's where we got the big reversal. It coincided with the news about Powell potentially being fired, but that was where we saw a big liquidation because of the news, but also because buyers got trapped, and they got trapped hard because the news came out, and they realized even more they were trapped, and so they had to get rid of their positions. So we saw that, you know, in all of the markets, but certainly, you know, US dollar franc, it was such a really, really nice setup the way it pushed into it. Did get the helping hand with the news, which basically exacerbated the sell-off, but the sell-off was really nice. So going into this week, I'm looking for exactly the same thing in pound franc. I'm going to be looking for the pullback, the test of this high, trading into the sell zone above the 1.08383, and look at the descending channel as well. So right here, take a note of that area in pound franc, because if we push into that area like we did with US dollar franc last week, then this is definitely something you want to be looking at for potential short opportunity. The second place I would look for an opportunity is potentially above here, because we turn extremely overbought, but I don't expect this to be taken out, especially in this kind of a market. So the 1.0932, keep it on your chart, because it is the extremely overbought level where you can add to the position or take an initial position if you're not already short. But the 1.0838 is really where I'll be looking at next week. Third and final thing, you know, if we push up, you know, maybe we kind of move more sideways, hit the top of the channel and don't take this out, you can look for that intra-week bear flag kind of breakdown, pull back, and that move down. The profit taking target is at the 1.0650, and that kind of coincides, you know, more or less with the bottom of the channel as well. So somewhere in that area is where I'd be looking if you were short intra-week at booking profits in any pound franc bear flag setup next week. Moving on to the CAD pairs then, starting with CAD yen. Now, what I want to highlight in this pair is a really nice area of confluence. We're also channeling. Top of the channel actually sits quite near the sell zone next week. So if we do rally intra-week, we trade into this, we poke above the channel and trade above the 109.96, and you have a long position, that would be a good place near term to book some profits. But what I'm going to be looking for primarily next week is I'm going to be looking for CAD yen to drop down, to pull back and enter the buy zone below the 106.83. Now, once we do that, you can see we've got some really nice lows just here around the 106.55 that I'll be looking to time a reversal on. And depending on how sharply it comes down, you know, if it kind of goes sideways, if it kind of comes down and chops around a bit first, we could very easily see this coming down into the buy zone below the 106.55 and into the bottom of the channel. You know, if it starts to move sideways, you know, and then kind of pulls back. So this is going to be a great place to start to look next week for a bounce back inside the channel. I'm going to be looking for a 1 or 2 day reversal. If you do get a bounce back inside the channel, it doesn't usually go beyond the halfway point of the range, you know, throughout that week. Sometimes, you know, it can hit the lower bound, take out the upper bound, but usually you need some big kind of catalyst or some really volatile markets. So that's what I'm going to be looking for next week in CAD yen. If we end up below the 105.27, that is the second place I can look for a long position. It would be a channel breakout. It'd be a trend change. So we're not anticipating that. But keep it on your charts nonetheless, because it's an important level where if we do breach that, for whatever reason, there's a very, very, very good chance of snapping back for 1 or 2 days. And the third and final thing is we start to make our way down towards the lower bound, but instead of getting there reactively, if we start to break out and we get momentum, maybe make a new high, then you can start to look for that bull flag setup into the upper bound on the top of the channel, which is at the 109.96. Next is New Zealand CAD. I can only be short or do nothing. So short opportunity is what I'm looking for next week. We've broken above the moving average. So what I'd like to see is I'd like to see this continue. Now, there is a nice low over here. This is kind of where we got, it's not quite a clean double top because we sort of push above, but it is still a kind of weak breakout and a reversal. And this is the confirmation point. See how they try to hold it and it fails. So there is a low here, but I quite like this high right here. The next one's all the way back here, so a bit of a gap here. So this is the high up we're primarily looking for. So I'd like to see the market come back, breach this high, and enter the sell zone above 0.8263. If that happens, I'm going to be looking for a short. And I'm going to be looking for a double top kind of reversal. And what could very easily happen is could bounce like this. That would be a good opportunity. I'd be looking for a short. Why? Because yes, we've traded as support. So you might be saying, hey, you know, why wouldn't you buy into this? Why are you selling this? We've bounced at support and now we're going up. But we're overbought. You don't want to be buying continuation patterns when you're overbought. You know, unless it's a stock and it's, you know, in Forex is very, very different to stock trading. You know, you can be overbought for long periods of time, etc. But generally speaking, especially in Forex, if you're overbought, you know, especially during the week, you do not want to be buying continuation patterns because they're likely to fail. If this is going to continue above the high, and the likelihood is it's going to fail, if I'm short here, as this has bounced because it's sucked in all these buyers, where are they placing their stop losses? Right here. And so as this breaks back down below, all of those stop losses get triggered. And that's the liquidation I'm going to be looking for in real time with GMT members next week if we can start to trade above here. If we trade above the 0.83460, this is the second place you can look for a short. It's where we turn extremely overbought, but I don't anticipate it getting there. This is the primary setup I'm looking for. And if we make our way back here, but we don't take out, you know, maybe we bounce right at the resistance level and then start to reverse, you can look for the break back down below the moving average, and that will give you your bear flag setup into the prior low, but also onto the profit taking target next week, which would be below the 0.80971. And the final CAD pair we're going to look at before we move on to the dollar pairs and then finish the video with gold and silver is pound CAD. So what I'd like to see is I'd like to see pound CAD pull back. Why? Because I'm looking to be short. I want to see it turn overbought during the week because then I'm looking at this as a potential sell the rip opportunity in this area. So if we breach the 1.85530 next week, that's when I'm going to get an alert in HedgeDash, and it's going to tell me, it's going to send me a notification, say you're overbought during the week in pound CAD. I'm going to come in, have a look at it, and what I want to see then is I want to see, first of all, the price action. You know, are we trading above here with momentum? Are we starting to run up steam, etc.? But if we can start to trade into the 1.8603, even if we push through and trade into the 1.8622, those two levels here, this is almost like a sell zone within the sell zone. So now we've got two kind of sell zones. Sell zone is just an area where the odds of reversing are higher, right? Now we've got one based on resistance within its kind of volatility sell zone. So this is going to be a great place. I'm going to be looking for this next week, and I'm going to look for that failure back inside the range for the next leg down potentially. But I'm looking to capture 1 or 2 days worth of movement, generally speaking, as a profit-taking objective in all of these markets. If we end up above the 1.8707, again, keep it on your chart, but it's not something I'm anticipating, but that is where we turn extremely overbought, can pull the trigger on an initial position or a second position. And the third thing is, like the other pairs, we start to make our way back, and then we break back down below the moving average. So we failed to take out the upper bound because it's just too weak. So we call that a fast market. It then pulls back, sells off, and that kind of bear flag setup down to the 1.8244. That's the profit taking target next week. Fast market, good example, Frank Yen recently, right? Just failing to really pull back on any solid dips. Instead, just kind of breaking out intra-week, breaking out intra-week, breaking out intra-week. Okay, moving on to the dollar pairs before wrapping up with gold and silver. Starting with US dollar yen, I can only be a buyer of this market or do nothing. I cannot sell it next week. I want to see US dollar yen come down, enter the buy zone below the 146.56. There's a nice high over here, which we stair-stepped. We broke and we retested. Again, I like the lows, which, previously drove price higher primarily. So between this low and this high, you could look in this area next week. That's where I'm going to be looking for bullish reversal patterns. And I'm going to be looking for that 1 or 2 day liquidation back inside the range. If we end up below the 144.37, again, this is a place where I could add to that position if I so wish, or if I'm not already involved and it ends up down here, some nice lows here, you could time any kind of reversal with on initial position. And the third and final thing is if we get a fast market, so we start to break down, for those of you who like to trade Fibonacci's, because you can use any strategy, with the weekly Forex forecast. I'm talking you through my strategy and the setups that we look at with GMT members. But, if you're trading Fibonacci, you can still look for that reversal higher before we take that out. And that's how you know you've got a strong market, because you failed to actually dip down. So if you start to push into the 150.93, that would be the profit taking target for any intra-week longs next week in US dollar yen. Next is New Zealand dollar. I can either be short or do nothing. Look at this high right here. This prior resistance area. This is perfect, just inside the sell zone next week. So I want to see New Zealand dollar pushing higher. I want to see it breach the 0.60348 where we enter the sell zone and turn overbought during the week. And then I want to see it attempt to break through this high. As it attempts to break through this high, I'm going to be looking for this breakout to fail. That's where I'm going to be looking for a 1 or 2 day liquidation to the downside. If we end up above the 0.6115, then something dramatic has happened, so 0.61115, then that's, it's going to be a trend change because the high is right here. So if we breach this, we've most likely made a new high, which means that this trend has failed. This is actually reversed. So it's not expected to happen. Very unlikely it will happen, especially without a catalyst. But if it does, it is the second place I could pull the trigger on a short. And the third and final thing, we start to make our way back. We started to break above the moving average already. You can look for that intra-week breakdown. Notice how it sells off and then pulls back. And then you get a nice bear flag opportunity down. So you can look for that again next week. For those of you who like Fibonacci, look for that bear flag into the profit taking target, 0.58814. And last but not least, we have pound dollar. Now, pound dollar is also kind of channeling. So again, you may just get the intra-week breakout. It may not push high enough to turn over bought during the week. So you can look for that. We've already started to flag back towards the channel. Every time you have this, you look for the channel, you draw that when you start to get a correction into the top of the channel, and that intra-week breakout would look like this. Right, moving average would come down, you get the pullback, and then into the profit taking zone at the 1.32666 and the bottom of the channel. So if you are trading, Fibonacci or kind of bear flag stuff, bull flag stuff, that would be the setup I'd be looking for next week. What I would personally prefer to see, even though, that could be a good one, especially if you get the momentum, I would prefer to see this even break out of the channel, pull back and turn over bought during the week. So if I take the channel off, so you can just see if we do get that channel breakout, this is what I'm going to be looking for. I'm going to be looking for us to turn overbought during the week, and this high right here, the 1.35870, I'm going to look for buyers to break through it, and that is going to be where next week I'm going to be looking for those buyers to get trapped, pull their positions for the liquidation. May even just come back and retest top of the channel, but that is what I'm going to be looking for next week. Okay, so wrapping up the video with gold and silver. Now in last week's video, I highlighted this range in gold. There's a high here and these two lows over here. And I said that gold was in a range, moving sideways, and actually I would be prepared to trade gold either way. That is true again this week, and so once again I'm going to be taking a reactive approach to gold. This market did absolutely nothing last week, it just kind of chopped around up and down. But if we can extend in gold, so I would leave the intra-week breakout stuff, but if we can extend in gold above the 341596, then, because when you've got a neutral market, selling resistance and buying support is a good policy. If you've got a trending market to the upside, selling resistance is a bad idea. But in a neutral market, selling resistance, buying support is a good idea. So I would look for that range trade above the 3434.46. If we breach this, I'll be looking for it to fail back inside the range for a 1 hour today liquidation. And if we do the opposite and we trade into the 327603, so I'm not being predictive here. I'm not trying to tell you what I think is going to happen next week in gold. What I'm doing is saying if either of these scenarios plays out, I'm going to be looking to pull the trigger on a long or short position next week, depending on whether it tests the top of the range or the bottom of the range. So if we breach the 327603 and we can trade into the range bottom, which is defined by this primary low, and then we tested it again over here, at the 324971, this is where I would consider a long opportunity in gold. Overall, I always prefer to buy gold than sell gold, so this would be my preference to come down here. But if we do take out the 3434.46 at the top of the range and turn over bought during the week, I would also consider a potential short in gold just for a couple of days. And last but not least, we have silver. Now, silver is a buy or do nothing. I'm not looking to short silver. What I would like to see next week in silver, I'd like to see silver come down and, you know, maybe even poke out the bottom of the channel and breach the 3632 and trade into these lows. 1, 2, this area here. This kind of horizontal area in the buy zone is where I'm going to be looking next week. From below the channel, I'm going to be looking for it to fail and bounce back inside the channel if we can get there. Going to look for that 1 or 2 day move to the upside. The second thing you can look for is, you know, we may come down, and especially if we're moving more sideways, we may just test the channel and hold here. If that's the case, you know, we'll be most likely below the moving average. And then that's when you can look, or you can even draw on, you know, your counter trend line if it's there. We've got these lower highs here. Then you could look for the re-break. That's when the moving average follows the pullback, and you can look for the long opportunity into not just the top of the channel, but also the sell zone where we turn overbought during the week in silver. So it's a good profit taking opportunity for any longs, and that's above the 39.99. But I can only be long silver next week or do nothing. I cannot short this market next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge-platform is included with every GMT membership.